How's it going, everybody? Welcome back to the Satoshi Club, where today I'm going to explain everything you need to know about the Howey Test. Now, the Howey Test was established back in 1946. It's essentially a method for the SEC to determine whether or not an asset is a security or a currency, right? A currency such as, Bitcoin, right, which is still considered a currency and not a security, or a security such as, stocks, ETFs, funds, or even some ICOs out there in the crypto world. So you're going to see that there is a little bit of dichotomy here where some assets are considered securities, some are not. Ripple is actually currently in a lawsuit with the SEC because they raised $1.38 billion through the sale of 14.3 billion units of unregistered securities, right? And they're trying to prove or disprove that it was a security based or not. And the SEC argues that by selling XRP, Ripple actually meets the second and fourth factors of the Howey Test, which you will learn about in a few minutes, but they didn't reach the other two. So if you enjoyed the video, as always, drop a like and let's get straight into it. Crypto is here to stay, and undoubtedly it will continue to disrupt countless industries such as the healthcare industry, you could just name a lot of them, and I probably made a video about that in the past. But in general, as crypto and the blockchain market grows, there will be a lot of complicated regulatory challenges, right? And one of them is whether or not to classify an asset as a currency or security, and basically the Howey Test is here to help us with that. Now, the Howey Test itself refers to the US Supreme Court case for determining whether a transaction qualifies as an investment contract or not. If a transaction is found to be an investment contract, it is considered a security. It's then subject to registration requirements under the Securities Act of 1933 and the Securities Exchange Act in 1934. Now, according to the SEC, which we all know what it is, an investment contract exists when there is the investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. And what does this mean? Well, it means that the Howey Test is going to help us figure out whether or not some people are going to profit of it and whether or not there's an entity that is pooling all of the money, and a few other things that you will learn about in a second. But before we get into that, we should probably do a little recap of what a security actually is. Now, this is some basic economics right here, and before we dive into the Howey Test, you guys have to know that a security is a financial instrument that holds some type of monetary value and can be sold or traded in a financial market. Equity securities, first and foremost, represent a share of ownership in a company, trust, or partnership, right? Think capital stock, think stock market. That is equity, right? Equity rises if the company increases in value, equity falls if the company decreases in value, and you can basically profit by having equity or stock of a company out there. Now, there's also debt securities, right, where companies can borrow funds from investors and repay the loan with interest, right? And some examples of debt securities are bonds and promissory notes. Now, hybrid securities are what the name actually suggests. It's basically a combination of debt and equity securities, and you have derivative securities, which are contracts between two or more parties. Now, the value of these derivatives depends on the price of an underlying asset, which is being tracked by everyone. Now, in the US, all offered securities must register with the SEC, right? And here comes the Ripple problem, because Ripple didn't register as a security, right? But the SEC thinks that Ripple should have registered as a security because they did kind of ICO, but kind of not really. So that's why they're still in this lawsuit that's lasting over a few years. And if you want to find out more about that video, you can do so looking right above me at this point. But let's move on. Kristen Smith, the head of the Blockchain Association, told CNBC that these decentralized networks don't fit neatly within the existing regulatory structure, which means that cryptocurrencies and blockchain technology, or just more specifically cryptocurrencies, don't really succumb to the Howey Test and shouldn't, because they shouldn't be watched as securities. Now, the Howey Test, a little bit of a background, it was it dates back to 1946 when the SEC versus W.J. Howey Company reached the Supreme Court. The case concerned a sale of land with citrus groves to investors in Florida, and the Howey Company's business model revolved around an arrangement with the investors who would then buy these groves and then turn around and immediately lease them back to Howey, right? And there was a profit here for everyone, and the company would tend to the land and sell the harvested citrus fruits, basically raising funds to purchase more and more land. But the Howey Company didn't register as a security, right? The transactions were not registered as securities, and as the SEC deemed in their final ruling of Howey, the Supreme Court says that the leaseback arrangements were investment contracts under the Securities Act of 1933, which basically means that the Howey Test was created at this point right here. The criteria that the Howey Test actually holds are these four things, which derive directly from that case in 1946. Now, a security or a transaction qualifies as a security if it involves the following four elements. First of all, an investment of money. Second of all, in a common enterprise, right? Third of all, a reasonable expectation of profit. And fourth of all, derived from the efforts of others. And what this basically means and how it looks is it's a very gray area, right? This can be interpreted in a lot of different ways, which is why people have difficulties understanding the Howey Test, and it's usually not so black and white as the SEC would want it to be. But in general, a transaction must meet all four prongs of the Howey Test if it wants to be deemed as a security. Now, since that test was actually created, everything has expanded to assets, inclusion other than money. Also, the common enterprise term doesn't really have a clear definition, right? None of this is really too clear, and that's why various courts have used different interpretations of the Howey Test at all, right? But the final factor of the test concerns whether the profit from an investment is mainly or entirely outside of an investor's control. And this basically means that if investors have little to no control over the investment's management, there's a good chance that it's a security. But if an investor has notable influence on the handling of an investment, it is likely not a security. So since then, it's very difficult to put this on paper and make it black or white. Courts examine the economic realities of a transaction rather than simply the name or label it's given to determine if it passes the Howey Test. Now, this is why we move into ICOs, right? And the ICO process is a very simple one. A company creates a white paper. It's a pitch deck basically outlining the company's pitch to potential investors. Then they raise money, from investors who are interested in this, and they give them tokens or coins as in return, right, for these financial contributions. And what happens after that is, these coins can serve various purposes, but in general, investors are investing to get these coins so that they would profit from them. And ICOs are very highly unregulated in the US. They're really, really risky, right? And, during the ICO boom of 2018, a study of 1.5k ICOs almost showed that 1 in 5 ICOs showed red flags of being a scam. But in general, ICOs are usually considered as securities because it is the pooling of funds to actually, raise money by a common entity, by a common enterprise to, grow into the future. So currently, there's not enough investor protection in crypto finance, issuance, trading, or lending, which is what the officials say. So ICOs can be considered securities, which is why Ripple is, still having this lawsuit with the SEC. And in general, crypto, passing the Howey Test, it's still very, very much of a gray area. There are replacements for sovereign currencies, and this is what the, Jay Clayton, the previous chair of the SEC, actually said. Cryptocurrencies, these are replacements for sovereign currencies. They replace the dollar, the euro, the yen with Bitcoin. That type of currency is not a security. There's no common enterprise where investors are pooling their funds because Bitcoin is decentralized. And, as opposed to being a security, Bitcoin has never really sought public funds to help develop its technology, and it's considered an asset similar to gold or diamonds. But on the other hand, ICOs are a completely different matter, right? A token or a digital asset where I give you money and you go off and make a venture, and in return for giving you my money, I say you can get a return. Well, that is a security, and we can regulate that, said, Clayton as well back in 2018. When a token does not pass the Howey Test, it's classified as a utility token. That's basically like a coupon, and you can find examples of that at Filecoin and SiaCoin. And the bottom line is there's no one-size-fits-all regulation when it comes to digital assets, and the market is going to be more and more regulated in the future. Now, Is this a bad thing? Well, no, by no means is it bad. It's just how it's supposed to be. Everything in the world is regulated, and so will cryptocurrencies, and it will provide, in my opinion, a strong base for cryptocurrencies to grow into the future, and all backed by blockchain technology. So that's it for today's video. I hope you guys enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or NFT world. So thanks for watching, and I will see you all in the next video.